I'm here with Croft Axon, and we're here to talk about mortgages because you'd sent me an email here earlier in the week that really got my attention, and because I've been dealing with several clients and having trouble getting their mortgages, and your topic was the bank said now know how to save the day with mortgage underwriting, and so I really wanted to know a little bit more about. I don't think a lot of people know about what underwriting is and how it affects their ability to mortgage, and so I want you to explain a little bit more about that and how you might be able to help people where they're having trouble.
Um, Thanks, Trent. I really appreciate the opportunity to have a chat with you. The point I was trying to make with the email was just to help people understand, and realtors and buyers, that there's so much stress these days on the underwriting process on the back end and where we deal with. So clients may not be aware of it, but the government has become a lot more involved in the mortgage process. And they've set up guidelines and restrictions and policy changes over the years. After 2008, 2009, in particular, though, after 2016, they changed the rules. So the underwriting guidelines that the banks and the mortgage insurance companies have to follow are a lot more regulated and restrictive. But the thing about it, though, is they're not all the same. Not every insurance company operates exactly the same. Not every lender operates the same. Here at Gencor, we have an underwriting team. And our underwriting team supports our agents by helping them put their packages and their files together so that when we submit to a lender, we're submitting with a more complete package. And we're trying to anticipate the guidelines and the rules that those lenders have on their underwriting side so that we get the paperwork ahead of time. So it's a lot easier for the mortgage companies to say yes to us because we have a complete underwriting review that we do ahead of the submission. Now, sometimes when you're rushed, you're collecting paper at the last minute, but whenever possible, particularly in pre-approval situations, we're trying to get those underwriting guidelines ahead of time. The particular case that I was referring to, or the example I was referring to when I sent that email, dealt with some clients that had gone into their bank. They had a beacon score reject, and we'll talk about credit a little bit later, but that beacon score reject meant he was showing no beacon. For a lot of lenders, that's an automatic reject. So that might have been one of the reasons why they were declined. But I told the clients and the realtor, because they'd been declined at their bank, they'd been declined at another mortgage broker, and I suggested we should collect a full package to be able to, it took a few days, probably 4 or 5 days before we got all the paperwork. And in collecting that paperwork, I noticed that they had a lot of accounts with one bank, and that they had TFSA accounts. They had, just to give you an example of how underwriting can help, TFSA, RSP accounts, checking accounts, savings account. And I knew that bank had an internal policy to give points and credit to that client and give them the opportunity to score within their system without normally using or depending upon the credit scoring system. So that allowed these people to go. We went back to that lender, found out that we could get an override and escalate against the decline they'd had through the branch system. They were able to get an approval, and and we had to collect a lot of paperwork about their income. This fellow had changed jobs, and then he had made less money during COVID, which is another whole issue, the whole COVID thing and people's income declining, and different lenders treat that differently. But going through that process, we put together a package that led to an approval. So we ended up helping the fellow. The fellow was 15, 20 years. He hadn't owned a home, like quite a long time before he'd been out of the market. So he got back into the market to own a home. I knew the selling realtor. They were very happy to get a sale, or the listing realtor rather. And the buying agent was very happy after 3 tries at financing, was able to get an approval and get paid on that transaction. So ended up a very big success. And I wanted to just express to people within the industry that it is important to understand whether the underwriting has been done properly and presented properly, because sometimes you can mitigate mistakes or problems in the file and get an approval.
I think a lot of people are, they tend to just go to their bank and they think that they have a relationship there with their bank and that they can get the mortgage that way. But maybe explain to people what the difference is between what a mortgage broker does instead of somebody working at a bank.
Oh, for sure, I'd be happy to. So The biggest difference is that we can work with all lenders and we can understand and know the guidelines of all lenders. So some of the biggest things is that an individual bank, they have their policies, they have their guidelines, they also have their interpretation of what they will do with if it's an insured mortgage, a high ratio mortgage. They will also apply some of the insurance company's policies. They might not use some of the more liberal policies and be able to apply for an approval. So it could be something as simple as the debt service ratios. So you're allowed to spend a certain percentage of your income on the mortgage payment and the taxes and condo fees. Now, one bank might say 35% is allowed. Another bank might say 39. If it's a conventional mortgage, a different lender might say, well, we're going to allow 50% and make it an exception, or 47%. Well, those differences in those ratios, you say, oh, numbers, big deal. But it could be the difference in tens of thousands of dollars of mortgage balance. So it can make a big difference in that regard. Some other areas might be related to credit. A bank may have a policy that they won't do a mortgage unless both people have over a 650 credit score. Or they may have the policy, like I alluded to in that first example, where at a beacon reject and the bank said no, but then that same bank, when presented with proper information, came back with a yes. So it's really understanding that just because your bank says no, the bank down the street could say no. We deal with 35 different lenders, A lenders. We also deal with B lenders who work in certain situations. Sometimes it's private financing. I've had people go in and want to get bridge financing. They're seniors, they have a clear title house. They go into their bank and say, we'd like to get some money to go buy a new home, and we want to close on the new home before we sell our existing. And the bank will often say no. They could be 40-year clients of the bank, and they get a decline to get bridge financing. So there's, and that doesn't mean they can't get the money, or there isn't a lender that will lend it to them, or there isn't some program that could fit somewhere else. Some lenders will allow a line of credit as long as you maintain that line of credit. So there's various ways that we can provide solutions. So brokers, because we can deal with the full breadth of lenders, and we can know the niches and the differences that they all have, we can find solutions. And so just because a bank says no, that doesn't mean it's a no for the file.
Yeah, and in some cases, I guess you can go back even to the same lender and present it in
Yes.
a different way, and it makes a big difference, right?
Yes, that happens. I mean, usually we just, pack up and go, approach someone else who's, because often it's a niche policy or it's a guideline. Some lender might say no because they have a square footage minimum. And they may, okay, with that property, that condo is too small. There's micro condos are becoming more popular. Well, a lot of the banks will say, well, our minimum square footage is 700 square feet, or whatever the number might be. And some other lender, it might be a different bank, but another lender might come back and say, well, it's a 350 square foot micro condo. We'll be happy to do that. So there's different policies with different lenders. So brokers, experienced brokers will know those guidelines and know those policies, and can help the client and the realtor by getting an approval where an individual bank would say no right up front.
I think one of the challenges too is more and more people work on contract, and they work
Yes.
self-employed, and so that changes things too, doesn't it?
Oh, absolutely. There's various policies and guidelines, and that's an area where the lenders and the banks are very unique in what they approach. The general guideline from the insurance companies is a 2-year history on tax returns for self-employed people. But CMHC has a program where you can get a mortgage approved with less time than that. The other two insurers, depending upon the history, if somebody has a history either within that industry or and then perhaps has gone from being an employee to being contract, there's policies for that. There's also still some business for self-stated incomes. So where you can actually get an insured mortgage based upon stating your income. Now you have to provide support documentation on the amount of cash flow and various things. Perhaps it's a contract that you have, but often we see people get declined in the banking system who come to us, and we're able to find a solution for them with one of the other lenders. And there are some lenders, even if you put 20% down, who will just work off of the cash flow through the bank account of a self-employed person. So there's various programs that can help, and that's a big aspect of our business, helping self-employed people.
Hmm. And so one of the things that I find that from being an agent and talking to people is that a lot of people believe that they've got a pre-approval in hand, and maybe explain what that means, because I find out a lot of the time that they actually believe they have a pre-approval. They talk to somebody, but we come down to getting the financing, and they don't have that at all.
Yeah, for sure. That's a very common circumstance and we often get approached with trying to put Humpty Dumpty back together again after that it's fallen apart. So what the difference is and what's unique is that for many people they get a rate hold, and the banker hasn't really told them that this is just a rate hold. And there's a few things that can help people understand whether they've got a rate hold, whether they have a pre-approval that has some underwriting done, whether they have a pre-qualification that maybe a little more was done, or a fully underwritten pre-approval. And what you want to have as a buyer and what you want to have as a realtor is to understand whether your clients have a fully underwritten pre-approval with a rate hold. So that means they're going to get the rate for 120 days. So they're protected on the interest rate if the rates happen to be going up. And it helps manage through that process. It also, in having it underwritten, the pre-approval underwritten, they've presented their documentation. They've had credit checks done. So if they've signed to have a credit check done and completed, then know what their beacon score is. Because we've seen people where they think they have a pre-approval at a bank. The bank hasn't even done a credit check. The offer's written. They come in and they go, oh, gee whiz, you declared bankruptcy a year ago and you want to put 5% down. Well, that isn't fixable. So if they're trying to get a 5% down with a previous bankruptcy that's within 2 years, they're just not going to get approved. But in many cases, if we're pre-approving people, we can let them know if they're trying to do it with, high ratio, make sure they fit the high ratio guidelines and this insurance, CMHC or Sagan or Canada Guarantee. There's 3 companies that provide insurance, making sure that you fit their guidelines. Somebody might be looking at a property that perhaps has post-tension cable, and they might be post-tension cable, but they also have an age restriction. So that can lead to complications. So they might have a pre-approval thinking they can write unconditional, and then there's problems with the property doesn't fit the guidelines that lender has for their pre-approval. So knowing the property can help, and so that whole pre-approval system, it's really, really important to understand whether it's been vetted at all or whether it's a simple rate hold.
We just had that. I just had that with a client this summer who worked at the bank, and he worked in lending, and we made an offer on just a little. He's just newly started. He came from out of the province, and he wrote an offer on a small condo. He didn't want to take on too much debt. His wife's not even here yet, and so he wrote an offer at I think it was a $200,000 condo, and it was post tension.
Yes.
And I was really suspect. I had called before we wrote the offer and said, hey, you've had this on the market for a lot of time, and looks like it's gone pending a couple times. What's the problem? He says, no problem. He said, no problem at all. And I was like, well, and so then we wrote an offer, we got it accepted, and then he got declined, and he was in no shape to do that. And I even think there's I just had a client here last week who works at the Royal Bank in commercial lending, and he thought he was going to get a special deal from the Royal Bank because he works there, and he was
Yes.
disappointed because he didn't get the rate that he wanted. So some of these guys are, even though they work at the bank, they go outside the bank they work at to get mortgages.
Yeah, that happens frequently. The rates we're able to obtain, because it's not only dealing with a broker where you're working on getting the approval or dealing with some issue or specific circumstance on the file. Frequently, we're able to obtain better rates than are initially offered through the banking system or in general. So there are wholesale lenders that will offer good rates to mortgage brokers. So and it's also that even within the broker system, that pre-approval, there are many broker lenders who provide pre-approvals, but they're not underwritten. All they're doing is a rate hold. So it's important for clients to know, has the pre-approval you think you have been underwritten, or do you simply have a rate hold? Have you provided all your documentation? I mean, one of the things that's frustrating is you can provide all of your documentation, it's all done, and then 90 days later you're writing an offer, and the banker says, well, we need to see your pay stub again, or your letter, we might have to have your letter rewritten. But so there can be a little bit of frustration in having to do it over again to provide the same information but more currently dated. But the comfort and knowledge that you have a underwritten pre-approval, and when the market was a little hotter and people were wanting to write unconditional, it's pretty essential to have your pre-approval underwritten so you know what you're at. Now, there may still need to be an appraisal. There may, people may still want a home inspection. There's some things that they may want. This market, there aren't quite as many unconditional offers, and it's not like Toronto or Vancouver where there were so many of those. But we did have a few months in the spring where it was common to see unconditional offers. So that's why it's really important to make sure that you deal with a mortgage person who's underwriting your file and making sure, because people might even, whether it's being on probation or having changed jobs or, being, having a spouse out of the city, do they add that spouse to the transaction? There can be so many variables that can change whether there's an approval and some things can be dealt with if you're collecting the paperwork. You can find out about, people might be separated and think that means nothing. Well, being separated might mean you have support and alimony payments, and you didn't think, and you don't think you're making any. It was amicable, doesn't make any difference. You write an offer, and all of a sudden, well, you're not living with your wife, you're separated. The lender's going to wonder if at some point you're going to have an alimony payment. So there can be so many different things that people can just dismiss as unimportant. So that getting that pre-approval underwritten is very important to having a smooth transaction later.
And one of the things I've been running into with that is that even now, late September, with two clients in particular, we've been running into competing offers.
Yes.
One property came up; it was 900,000, sold 100,000 over the asking price in the first day. 4 showings, 4 competing offers. This is crazy, right? And if we have a pre-approval letter in hand, it's going to go a long ways to have to getting that offer accepted. And so I think that's a big part of the process. Now, the other thing I was going to say is, how long does it usually take to get a pre-approval?
Well, so the issue there is, again, you can get a rate hold, the computer will kick one out in 10 minutes. If we're going to be having a pre-approval that means something, we're collecting paper. Once we have sufficient paperwork to be able to determine the source of the down payment, make sure that it's legitimate and going to work, and also confirming the source of income and understanding and the right paperwork to determine, I'd say 1 day, 2 days, we can have a pre-approval with some lenders. If the file's complicated and somebody who's self-employed and we're getting the paperwork's coming in a little bit piecemeal, and you get, well, here's the T1 general, well, where's the tax returns, or where's the notice of assessment, and well, we're not set up to get it off a CRA site. It takes a few days to be collecting paper, but once we have the paperwork, 2 to 3 days would kind of be maximum to get something out of a lender.
And of course, if you got a pre-approval, how long is it going to take once the offer is written for you to get that actual approval on that property?
Yes, well, again, there it depends upon how good a package we have. Also, whether there's going to need to be an appraisal. If we're having to get an appraisal done, then some of the appraisers are backed up a little bit, so it can take a few days. But generally speaking, 5 to 7 days would be sort of typical time for conditional financing. If you're in a competing offer and you want to waive that, then you better make sure you're set up ahead of time.
So what happens if the accepted offer is slightly higher than the pre-approval? At what point is it just a no-go? Is it like to the dollar, or is it to the $10, or what?
Well, that's a very good question, because sometimes people are out looking around, they're shopping with a realtor, and they think, I can spend $400,000, and they find a property that they have to spend $420,000 on. What do you do? So in part, it depends whether it's an insured mortgage and whether the ratios in the pre-approval have been written to the max. It also, so If it's insured, then the ratio guidelines are 39 and 44, and you also have to have a certain beacon score to be able to get that ratio guideline. That's again why the pre-approval is so important, because if your beacon score isn't high enough on your credit report, then you can't maximize out the ratios. And then without knowing that, you could be telling people, well, you qualify for 400, but once you look at their beacon score, you might go, well, actually, you're going to qualify for 370 because your score isn't correct. So there's a lot of factors that come in. What exactly are the taxes? What exactly are the condo fees? Are the taxes and condo fees that we used in the pre-approval what the reality is? Is there room there that there's a little bit of room to move? Another part of this, Trent, that is a bit esoteric, but when you get a pre-approval, most of the lenders have a slightly higher pre-approval rate. Now, if mortgage rates have remained consistent, when we actually get an offer, there may be lenders that have slightly lower rates. And the importance of that is the whole government stress test. Because with the stress test, people have to use 525 as their qualifying rate, or the contract plus 2%. Well, during this recent this year where interest rates are going up, the 525 doesn't apply anymore. It's always the contract plus 2. So if we're dealing with the contract plus 2, it can make a big difference if we have a pre-approval. Let's say the pre-approval is at 469 or 429 or something, and you add 2% to that. Well, now we're dealing with a 629. I mean, a 649 is the rate. Well, if a lender has 10 or 15 points cheaper on a sale basis or a special basis, we might be able to get slightly higher. Sometimes when we do pre-approvals, we like to have a little bit of a cushion in those ratios just in case you run into that situation. So then if those things aren't kind of working where, maybe with 20% down, you're able to, if they have 20% down, you might be able to get a bigger mortgage by getting a ratio exception. We also might be able to deal with a B lender that deals with higher ratios. Now, the rate may not be quite as attractive, but it might be able to buy that property. And then the final thing is, call your parents when you got a cosigner, or to find a friend for, get a family member to help being a cosigner. So if you write above the pre-approval rate, really there's a number of factors that might allow you to get a slightly higher mortgage. But in general, you better check with your mortgage agent or your mortgage broker to find out whether there's any room.
What I wanted to talk about a little bit was the mortgage with improvements, because I'm finding a lot of times people are, they're unhappy with the property. They're looking for that perfect gem, and they don't have the money to be able to get everything they want, and they don't want to live on somebody else's carpet for allergies or whatever reason that is. Explain that process a little bit.
Yeah, for sure. So there is a product, and it's called Purchase Plus Improvements. And the Purchase Plus Improvements is often an insured product where the insurance is involved. And for many lenders, it's an insured product. But there are also some lenders who will do insured Purchase Plus Improvements conventionally. I'll speak first about the insured product. So the mortgage insurance companies have to back the lender's decision. They're going to look for quotes on what work needs to be done. And they're typically going to want an appraisal to confirm that those improvements are going to increase the value of the property. The general guideline is a $40,000 maximum or 10% of the value of the property. And they don't do any draws. So people have to have the money up front to be able to get that work done. It's a holdback at the lawyer's office. Then once you confirm that the work is completed, the money gets released. Now, I'm about to contradict myself because about 3 weeks ago, we had a lender come in who say they've set up a program now for draws on Purchase Plus Improvements, plus they're open to higher amounts. So it's very good news for people that want to do the sorts of things you're mentioning and maybe perhaps a little bit more extensive. Perhaps build a garage and do a basement development, or replace the carpets, or perhaps replace the kitchen, or some of those sorts of things that might, 40,000 might get eaten up. So people have to qualify for the end mortgage. And the process is the same in that they have to get quotes, they have to get approval, they have to get an appraisal approved. But this one lender now is willing, so if people, want to do a $60,000 Purchase Plus Improvements and they only have enough money or enough credit to fund portions of it, they can get up to 90 or 95% of the money back if it's an insured mortgage by getting the work done and going through a draw process. And then the completion mortgage, the money will come from the lawyer either in one tranche, as we mentioned earlier, with this one lender withdraws to be able to pay the homeowners back for the work that they've gotten in place. So it's a very good program to, like you say, to get rid of the carpets that they may not want to live on the other guy's carpets, or they may want to make some improvements. The big thing is that we have to confirm it's going to improve value.
Right. And so it has to be able to something that would appraise after the
Yes,
improvements were done.
yes. I had one lady once who was approved to do a bunch of work, and she got some shag carpet at a garage sale and put it in. And when the appraiser came back out to inspect, it caused quite a few problems back and forth with the lender as to whether this green shag carpet was really improving the value.
All right. Well, thanks for today. I really appreciate the time we've had, and we'll continue maybe a few more of these if we've got more questions.
Okay, well, thank you very much for the opportunity to speak with you. I really enjoyed it. Thank you very much.
Okay.
Take care.
So don't give up. We can always find a way for you to get a property if you really want to buy one. We've got a lot of resources, and being in the industry as long as I have, know lots of different people, and there's always a way if you're really wanting to do something. I invite you to contact me if you want to know the value of a property, or if you're having trouble finding a property, or if you're thinking about buying something, you want to know what it might be worth in this market. You've got a general question, even if you're trying to sell and you want me to do an online evaluation, I can do something like that. Do check my YouTube channel for updates and new videos all the time. We're always thinking about other things that we get asked about. And you have a great day.